All right, so you know that idea that we've always been told that keeping your money in a bank account is like the safest thing to do.
Yeah.
That's where it belongs.
Yeah.
What if we've been kind of looking at that the wrong way?
Hmm.
I mean, think about it. Inflation has been a real pain
That's right.
lately. Interest rates are, you know, they're not exactly giving our savings a boost.
Yeah. They're pretty much non-existent.
Exactly. And, we've all seen the headlines
Oh, yeah.
about banks and the economy.
Yeah.
It makes you wonder, right?
For sure, it does make you think twice.
Yeah. So maybe relying only on that traditional savings account is riskier than we think.
It's a good point.
Hmm.
We always think of cash as being the ultimate safety net,
Right.
like it's the most secure thing. But when you consider how inflation just eats away at its value,
Yeah.
that safety net starts to look a little less reliable.
Exactly. So that's what we're digging into today.
Okay.
We're going beyond those regular bank accounts and exploring some really interesting alternatives.
I like it.
So think of this as your guide to understanding how you can manage your money in potentially safer and more profitable ways.
I think that's really important for people to hear because, it's not about ditching your bank completely.
Right.
It's about expanding your options and seeing how these different pieces can fit into your overall financial plan.
Exactly. We're going to cover everything from the digital stuff, like those digital wallets we have on our phones,
Right.
tap to pay, and we'll even break down cryptocurrencies.
Okay.
Then we'll look at more traditional assets like government bonds, real estate, even gold.
Nice.
And we'll even touch on keeping some physical cash strategically and the idea of starting your own business.
Sounds comprehensive.
So our goal is to pull out the key insights about these alternatives, why they might be beneficial, and how you might want to consider them.
Love it. Let's dive in.
Okay, so let's start with the basics, cash.
Right.
We all know it. We use it. It feels secure, right?
Yeah, you can hold it in your hand.
Exactly. But there are some real drawbacks here.
Sure.
Cash isn't earning you any interest, just sitting there. And inflation is constantly chipping away at its value.
It's like it's losing value as we speak.
Yeah, and I think it's interesting how we feel about cash versus the reality of it.
Right.
It might feel safe, but it's actually pretty vulnerable to things like theft or just losing it.
Absolutely. And unlike money in your bank account, you can't really trace cash or get back if it's gone.
Exactly. And don't forget the hassle factor. Have you ever had to go out of your way to find an ATM?
Oh, yeah.
And maybe even pay a fee just to get your own money?
It's so annoying.
It's not very efficient, is it?
Not at all.
Plus, cash is a target for theft, whether it's at home or out and about.
Definitely.
And once it's gone, it's gone.
Yep, no paper trail.
So think about it. Do you often find yourself needing to take out cash? Do you ever carry around more than you're comfortable with?
Yeah, that's a good point to reflect on.
Yeah, recognizing these little annoyances in our daily money routines is the first step to finding better solutions. So if physical cash has all these issues, what are some of the modern alternatives?
Well, it's becoming really popular.
What's that?
Digital wallets.
Ah, yes, those on our phones.
Exactly like Apple Pay, Google Pay, Samsung Pay.
Right.
It's like having a secure digital vault right on your device.
Okay.
And you can make payments just by using your phone or your smartwatch even.
And they use all sorts of cool technology to keep your information safe.
Oh, yeah, like tokenization.
Tokenization.
Yeah, that's where your actual card number isn't stored on your phone or given to the store when you buy something.
Wow, so it's like a secret code instead of your real card number.
Exactly. It adds an extra layer of security.
That's really clever.
Yeah. And the convenience is amazing.
Oh, for sure. Just tap your phone and you're done.
No more digging through your wallet.
Exactly, but it's not just about convenience. The security is a huge plus, too.
Totally. Many wallets use your phone's biometrics, like your fingerprint or Face ID.
Right.
So only you can approve a payment.
That's great.
Plus, all your card details are usually encrypted.
Encrypted?
Yeah, it's like scrambling them up so no one can steal them.
So it's like a double layer of protection?
Pretty much. And you know what else is great?
What's that?
Every transaction you make with a digital wallet is recorded electronically.
Oh, that's handy.
It makes tracking your spending so much easier than with cash, and it can really help with budgeting.
And catching any suspicious activity.
Absolutely.
Yeah.
So for anyone listening, if you haven't already, give digital wallets a try.
That's a good idea.
Download an app, add your cards, and start with a few small purchases just to get the hang of it.
Yeah, you might be surprised how easy and secure it is.
Totally. Now building on this whole digital payment trend, We have contactless payments too.
Right, where you just tap your card or phone on the terminal.
Exactly. It's everywhere now.
It's so
And
fast.
it's not just a fad, it's really catching on because it's so efficient, especially for those quick everyday purchases.
Yeah, sometimes you don't even need a pin on, just a tap and you're done.
Exactly. And again, security is a big factor here.
How so?
Well, these transactions use encryption too, making them safer than swiping your card.
Oh, right, because with the old magnetic stripe, someone could potentially steal your information.
Exactly. But with contactless, it's much harder.
That's good to know, and I bet just like digital wallets, contactless payments give you real-time alerts and transaction history too, right?
You have much more visibility into your spending, and you can spot any unauthorized charges quickly.
So for our listeners, check if your cards have that little contactless symbol.
Yeah.
If they do give it a shot or enable tap to pay on your phone.
It's a small change that can make a big difference in terms of convenience and security.
Okay, so now let's move into an area that I think a lot of people are curious about, but maybe a little hesitant to try.
What's that?
Cryptocurrencies.
Ah, yes. Like Bitcoin and Ethereum.
Right.
Now, I know it can seem a little complicated,
It can.
but at its core, it's basically digital money that aims to operate outside of the traditional banking system.
And one of the big ideas behind it is this thing called decentralization, right?
Exactly. Unlike the money we use every day, which is issued and controlled by governments and central banks,
Right.
cryptocurrencies run on these decentralized networks.
What does that mean exactly?
Think of it like the internet. No single entity has complete control.
Okay.
It's distributed. This appeals to a lot of people who are looking for a different kind of financial system.
One that's not controlled by any one government or institution.
Exactly. And security is a big deal with cryptocurrencies.
We always hear about blockchain.
Blockchain is the revolutionary tech behind a lot of cryptocurrencies.
Okay.
Imagine a digital ledger that everyone shares, and it records every transaction across a huge network of computers.
So it's like a giant public record of every Bitcoin transaction?
Pretty much. And because it's distributed, it's super hard for someone to tamper with it.
Oh, I see, because you'd have to change it on every single computer on the network.
Exactly. It creates a super secure and transparent system.
And I've heard that transaction fees can be lower with crypto, too.
That's right, especially for international transfers.
Oh, that's a big one, because banks can charge a lot for sending money overseas.
Yep, crypto can be a cheaper option in certain cases.
So for our listeners out there who are intrigued by crypto, but maybe a little unsure where to start.
I'd say definitely do your research first. Understand the risks, because crypto can be volatile,
Right.
but setting up a crypto wallet through a reputable exchange and trying a small transaction can be a good way to dip your toes in.
Yeah, like a small experiment.
Exactly. Think of it as a potential part of your overall investment strategy.
And, we have to acknowledge the potential for big gains, but also big losses.
Absolutely. I mean, look at Bitcoin.
Right.
It went from like $100 in 2010 to over $50,000 at its peak.
Wow.
So that shows you the potential for growth, but also the wild swings that can happen.
So it's not for the faint of heart?
Not exactly,
Yeah.
but it's definitely an interesting space to explore.
All right, so all these digital options we've been talking about point to a bigger trend,
Oh, yeah.
a move towards cashless transactions.
The future is digital.
Right. Our sources really emphasize how convenient and widely accepted this is becoming.
And it's not just convenient for us as individuals.
Right.
It's also great for businesses.
How so?
Well, think about it. No more counting cash, making bank deposits, or worrying about theft.
Makes sense.
It streamlines their operations and reduces security risks.
And from a safety perspective, having less cash circulating could mean fewer robberies.
Exactly.
Plus, no more ATM fees.
Yeah, that's a win.
So next time you're shopping, try using a contactless card, your digital wallet, or even look for places that take crypto.
Great advice. Start small and get comfortable with it.
One of the best things about going cashless is how easy it is to track your spending.
Oh, yeah. It's like having a built-in financial tracker.
Right. Digital wallets and crypto platforms often give you detailed breakdowns of where your money's going.
Totally. And a lot of them have instant notifications for any account activity.
That's great for catching fraud early.
Absolutely.
Plus, there are tons of budgeting apps out there like Mint Yolt Pocket Guard.
Oh, yeah. Those are super helpful
They connect to all your accounts and categorize your spending.
and help you set and track your financial goals.
So I'd say exploring some of these budgeting apps is a great way to get a clearer picture of your finances.
Couldn't agree more.
Okay, so what about when you need to send money directly to someone, like splitting a bill or sending a gift?
Oh, yeah. Peer-to-peer payment apps are perfect for that.
Like Venmo, Cash App, PayPal?
Exactly. They've become super popular because they're so user-friendly.
And instant.
Transfers happen right away, and the fees are usually really low or even free.
Especially if you link your bank account.
Yep, they're super versatile too. Splitting rent with roommates paying a friend back for lunch.
It just simplifies those everyday money transfers.
So if you haven't tried them yet, give them a shot. They're incredibly convenient.
All right, so we spent a good amount of time talking about digital alternatives for everyday spending,
Right.
but our sources also dive into a broader range of alternative assets,
Okay.
ways to store and grow your wealth beyond just how you pay for things.
I'm listening.
So let's start with government bonds.
Yep.
Essentially, when you buy a government bond, you're lending money to the government.
Okay.
And in return, they promise to pay you back the original amount plus interest over time.
Makes sense.
And they're generally considered pretty low risk because they're backed by the government's ability to raise money through taxes.
Right.
Like U.S. Treasury bonds are often seen as one of the safest investments out there.
Yeah, but it's important to remember that bond prices and interest rates move in opposite directions.
Okay, so if interest rates go up, bond prices go down.
Exactly. That's something to keep in mind when considering the risks.
So you're saying U.S. Treasury bonds are seen as a safe place to put some of your money, especially when the economy is uncertain.
Yeah, because they tend to be less volatile than stocks,
They offer stability and predictability, which is appealing to a lot of investors.
especially those who are focused on preserving their capital and getting steady income.
Now let's shift gears to something a bit more tangible: real estate.
Ah, yes. Bricks and mortar.
Exactly. Our sources highlight how real estate has historically been a big driver of long-term wealth.
You know what's interesting about real estate?
What's that?
It's a physical asset. You can touch it, you can see it.
Right.
It's not just numbers on a screen.
And well-chosen properties in desirable areas have generally gone up in value over time.
Absolutely, it's a potential powerhouse for building wealth.
And then there's the concept of leverage.
Oh, yeah. That's where you use borrowed money, like a mortgage, to buy a property.
So you're using other people's money to potentially make more money.
Exactly. It can amplify your returns, but it also amplifies your risk.
Got it.
And it's important to distinguish between owning property directly, which comes with responsibilities and can be hard to sell quickly, versus investing in REITs,
REITs.
real estate investment trusts. They're like stocks for real estate.
Okay.
They offer more liquidity, but they have their own set of characteristics.
So our sources gave some examples like that Manhattan brownstone.
Oh, yeah.
Imagine buzzing a property decades ago for a reasonable price, and now it's worth millions.
That's the power of real estate in certain markets.
But of course, there are things to consider like market fluctuations, property taxes, maintenance costs.
Definitely.
But historically, real estate has been a cornerstone of building wealth for many people.
Absolutely.
Now onto another classic asset: gold and precious metals.
The shiny stuff.
Right.
Yeah.
These are often seen as a way to protect your wealth, especially during uncertain times.
What's fascinating about gold and precious metals is that they've served as stores of value for centuries.
For like a hedge against inflation.
Exactly.
Hmm.
Unlike currencies, which can be affected by government policies and all sorts of things,
Right.
precious metals tend to hold their value over the long term.
Why is that?
Well, for one thing, their supply is limited,
Okay.
and they've always been accepted as a form of exchange and a symbol of wealth across different cultures throughout history.
They're like a safety net when traditional currencies are losing value.
Exactly. People turn to gold when they're worried about the economy.
Now, for something maybe a bit less traditional, luxury assets.
Oh, like fine art, rare watches, classic cars.
Exactly. These aren't usually considered mainstream investments.
Right.
But some of these collectibles can really skyrocket in value.
Oh, yeah. Those rare and sought-after items sometimes outperform even regular investments.
But it sounds like you need to know what you're doing.
Absolutely. You need specialized knowledge to navigate these markets.
Our sources mention some pretty eye-catching examples like those high-priced art pieces and watches.
It's amazing the kind of returns you can see in these niche markets.
But I imagine it's not easy to sell these things quickly if you need cash.
Liquidity can be an issue. Plus, you need to think about storage insurance authentication.
So
So it's not for everyone.
it's more for those with a passion for these things and the resources to invest wisely.
Okay, so we've explored a lot of alternatives to keeping all your money in a bank account.
Yeah, we've covered a lot of ground.
But our sources also say it's smart to keep some physical cash on hand.
Really?
But strategically,
Okay.
the idea is to have a small emergency fund in cash. I see, for those unexpected situations when you can't use digital payments.
Right, like a power outage or something.
Yeah, it's good to have some readily available funds.
And where should we keep this cash?
Somewhere safe, like a safety deposit box or a secure home safe.
It's about having that immediate access if you need it.
But be careful about holding too much cash.
because of inflation.
Exactly. It loses value over time and is vulnerable to theft.
And our sources brought up those examples of bank runs and economic crises.
Oh, yeah?
It highlights why it's good to have some cash outside of the banking system.
Just in case.
Okay, finally, let's talk about owning a business.
Now, this is a big one.
It can be a really powerful way to build long-term financial security.
It's about creating something that generates income.
Exactly. Unlike just holding cash or investing in existing assets,
Right.
a successful business can create value, generate ongoing revenue, and grow in value over time.
Plus, you're in control.
Right. We all know those stories of successful entrepreneurs who build incredible wealth.
It shows the potential for financial freedom when you're running your own show.
But it's not easy. Right.
No, it takes dedication, hard work, and often a lot of upfront investment.
It's definitely not a guaranteed path to riches.
But for those who succeed, the rewards can be huge.
So we've covered a wide range of alternatives, from digital payments to tangible assets to entrepreneurship.
It's been quite a journey.
And a key theme that keeps coming up is diversification.
Ah, yes, not putting all your eggs in one basket.
Exactly. Spreading your money across different types of assets is crucial for managing risk.
If one investment does poorly, others can help balance things out.
And it's not enough to just diversify. You also need to stay informed.
Absolutely.
Our sources recommend keeping up with market trends and economic news.
Yeah, using reliable resources like Morningstar, Yahoo Finance, Seeking Alpha,
Knowledge is power.
especially in today's fast-paced financial world.
So the big takeaway here is there are many smart and efficient alternatives to just letting your money sit in a bank account.
We've explored so many options.
From digital payment methods to various investment assets to even starting your own business.
It's about finding what works best for you.
So for you listening, think about which of these alternatives sparked your interest.
Yeah, which one resonates with you?
Which one aligns with your financial goals and how much risk you're comfortable with?
Because taking those first steps could lead to a more secure financial future.
It's about moving beyond the limitations of traditional cash.
And remember, this journey towards greater financial literacy and security is an ongoing process.
It's about constantly learning and exploring.
We hope this deep dive has given you some valuable insights and a solid foundation for your own financial journey.
Keep learning, keep exploring, and take control of your financial future.
Absolutely.
That's it for this deep dive. We'll catch you next time.
See you then.
Thanks for listening.
Restful riches, they're floating up high. Passive income steady, no need to ask why. Wealth is growing with each move you make. Invest with wisdom, don't hesitate or break. Educate yourself, don't settle for less. Get that knowledge, be your own success. Set yourself free, let the money flow. Stress-free living, that's how you grow. Restful riches, it's the life you'll see. Passive income, it's your destiny. Time for you to rise, leave the debt behind. Success is easy with the right state of mind. Stocks or real estate, make the right call. When you're educated, you can have it all. Long-term growth, let the patience be your guide. Watch your wealth build with each stride. Paying down debt, that's the first thing to do. Put your future in focus, make it shine through. No stress, no rush, just take your time. Wealth building's a rhythm, so let it rhyme. Restful riches, it's the life you'll see. Passive income, it's your destiny. Time for you to rise, leave the debt behind. Success is easy with the right state of mind. Every step you take, you're making it right. Peace of mind and the future's so bright. Building with patience, knowing you're free. Wealth is yours, just wait and see. Restful riches, it's the life you'll see. Passive income, it's your destiny. riches building high. Live your dream, reach for the sky. Passive income, wealth on your side. Stress-free living with your heart open wide. Diversify, don't put all in one. The path to wealth is a journey begun. Cryptos, dividends, and bonds that yield multiple streams, your future sealed. Consistency is key, let time be your friend.